What's going on, guys? Welcome back to another video here. In this one, we're going to be talking about exactly how you guys can grow your small trading accounts the smart way. You have to make sure that, again, you are looking at the market from a perspective of wanting to have long-term consistent success and not just trying to get rich quick and make a tiny bit of money. There are so many important things that we're going to be discussing in this video here, but the one thing I want to start out with is there is so much nonsense out there, especially in the trading space, about how to actually have success, and nobody actually tells you the key tips and tricks to actually get yourselves on your way. The first thing that I want to start off with is a very important statistic that I'm pretty sure that a lot of you guys have heard about, and you might be in this category right now. The vast majority of traders are either have failed or are failing, 90 to 99%. Now, what most of those market participants are doing is the same exact thing as everybody else. If you want to have different results than everybody else, you have to think and act differently than the other market participants that are failing. Again, think about it like this. If you see a bunch of people failing doing a certain thing, why would you then try and go accomplish that thing or participate in that activity the way that they are doing it and expect different results? To me, that doesn't make sense, but that's what these videos are here for. So let's get into it, guys. Again, if you do enjoy these videos here, make sure you guys hit that like button down below and make sure you subscribe too, because I have a lot more videos coming out for you guys like this in the near future. But let's get into it. So, how to grow a trading account, a small trading account, the smart way. Those of you guys that have been in the mastermind, these slides may look familiar. They're different slides, but I thought I'd bring this back for everybody here. So, let's get into it. Let's go through some of the expectations that we need to start off with right away. The first is you need to have a long-term vision. I know a lot of you guys are looking at the market right now, seeing these things on social media, people making some very significant amounts of money, and you want that to be you. The only way to get up to that point is to have the long-term vision and make sure you're setting yourself up with a proper foundation in the present in order to have that type of success going down the road. Like I tell all of my students, once you learn these skills and you are able to execute them on the market on a day-to-day, week-to-week, month-to-month basis, these are skills that nobody can take away from you, but you have to learn those skills in the present to make sure that you're able to have that success going in the future. Now, the second thing is putting yourself in the best possible conditions. Now, how do you accomplish this? The first thing that everybody needs to do is to always be trading with systems over discretion. Now, what I mean by that is if you are a discretionary trader, you are effectively saying to the market, I think it is going to go here next, or I think this is going to happen next. Now, again, while some systems you may be able to use a little bit of discretion, especially if you're using some of the economic data to tell you where to look in the market, sometimes discretion is good. But for the vast majority of new traders, they have not built up those skills of analyzing markets over time yet in order to have a useful use of their discretion. So we need to trade with systems, but having a real system is what's actually important. Most people in the market think that they have a system, but in reality, they don't. What a system actually needs to be is that if you were to go and try and program it into a bot. Now, again, I don't have any coding experience, but if you were to send the rules of your trading system to a programmer, would they then be able to code it into an algorithm to execute onto the market? If the answer is yes, you're trading with a pretty solid system. Now, here's why you want to be able to have a system like this. You are able to solve for emotional and risk management mistakes like a math equation. The reason being is if we come to this next slide here is that you're going to have to go through a process of testing and back testing. Now, again, all of my stuff has already been tested. We already know that it works. And it's absolutely awesome fun to trade with. I've gone through the testing. I've tested over years and years and years and years of my trading, and even before when I was testing these things. But testing is incredibly important, not just to show that the system actually works, but going back to that long-term vision point that I made initially, is that if you have a general idea of what a specific system is able to generate you over time, you are able to come to a very, very important conclusion in the present, and that is the outcome of one individual trade is meaningless. And that's what the key is. If you know what your overall win rate is going to be over time, your overall risk to reward, Well, then the outcome of one individual trade becomes meaningless if you know that the system should be executing over a period of time. That is why these systems are so important. And it also eliminates those emotional decisions that lots of, especially day traders, will make. Because if they have a losing trade and they do not fully understand their system or why that trade actually lost, it could be a mistake that they made, or it could just be a trade that did not actually just play out. That happens sometimes in the market. If they don't understand those things, it is very, very likely for them to go out into the market, continue to make trades that may not make sense, go on tilt. Instead of having a maybe 0.5% red day, 1% red day, it turns into 3, 4, 5% because they just didn't understand what their system actually is and what the data backing it is actually showing them in order to really generate that idea of that long-term performance. Now, before we actually get into a couple of strategies here that I want to teach you guys and show you guys, I want to go through some things that you guys absolutely should avoid, while also previously telling you guys the things that you should be doing. Because again, knowing what to avoid is sometimes just as important as knowing what to do in the market. So let's go through a couple of these things. First one, daily goals. Throw them out the window. Never, ever, ever approach the market having a daily goal, whether it's monetary or percent-wise. Here's why. The thought process of going through and saying, I want to make X percent or X dollars a day in the market, what you are then saying and assuming is that the market is a fixed income instrument when in reality it is anything but that. So having those daily goals leads a lot of people into those types of emotional mistakes. Guys, the outcome, remember, with a fully tested system and understanding what those results should generate over time, the outcome of one individual trade is meaningless in the long run if you have that long-term vision. A daily goal is going to lead you, if you don't hit that daily goal, to make those emotional and risk management mistakes when you are trying to make back losses that are just the cost of doing business in the market, which we all experience. The second is hype. Whether you're in crypto, stocks, Forex, whatever it is, you're going to see some people and some groups starting to get very, very hyped up about certain things. If you start hearing about it and all of this hype, it's probably too late. There's a quote from, I believe it's the Wolf of Wall Street. It's by the time you read about it in the Wall Street Journal, it's already too late. And what people think is just because something, whether it be a stock or crypto, has already run in the past, that it is going to do it again. There's a very, very common disclosure that is made in finance and money management, wealth management, all of the time, that past performance does not equal future results. And that is something that you always have to keep in mind. And the third is signals. I understand that the markets can be difficult and you think that taking signals from somebody is going to help you out. You'll never hear of somebody making a significant amount of money or learning any long-term skills by just blindly following somebody else's signals. There are two things that can go wrong with this. One, most of the time you're late and you're not getting the best entry that you need. Actually, three things. The second thing is you don't actually learn anything. The third thing is you've seen it on Twitter. A lot of these people who are putting out these signals, especially in the options market, are using you guys as their audience as exit liquidity. That is never something that you want to be a part of. And now that we've covered all the things you should be doing and should absolutely avoid, I want to go through a little strategy with you guys, just kind of the overarching ideas behind it that are going to help you guys a whole lot in getting you guys going in the right direction. But a couple of things first. So what most people try and do in the market is they make that one key mistake that I was talking about earlier, that's trying to have those daily goals. So if you want to have these daily goals, people think, oh, I should just go out and day trade. Now, day trading is great, but it should never, ever, ever be your first focus as a trader. And here's why. I mean, we talked a little bit about that margin for error, how it's so small when you're operating in the market here. Especially if you're trading these lower risk to reward strategies. Now, again, if you're going to trade a one-to-one risk to reward strategy and you're a new trader, it means that you have to have a win rate of above 50 in order to make money. Now, when you're looking as a beginner trader, and from all my years of experience, I know I look young. I'm 25. I've been doing this since I was 14 though. So I've been doing this for a very, very long period of time. When a new trader comes into the market and they're trying to make money, well, there's just going to be the overall just beginner mistakes that somebody might make. They might misidentify something. They might enter at the wrong place, set their stop at the wrong place, take profit at the wrong place, not understand that there's a very big piece of news coming. There are a lot of different factors that decrease that margin for error of new traders, and it leads them to those emotional mistakes of going on tilt when they're losing, when they don't necessarily understand why, or the trades that they take that end up losing that they actually follow all of those systematic rules for. It could just be one of those trades that loses, and that is the cost of doing business and part of the game. So when you think about a 5-minute candle, you have to think about every candle that you see as data. When there's more time in that candle, let's say versus a 1 minute, a 5 minute, a 15 minute, a 30 minute, a 4 hour, a daily, those larger time frame candles are going to have more data in it because there are more transactions taking place. So if there's more data within that candle, those candles then become a lot more meaningful to you as a trader. So you can have more confidence on entering on larger time frames than you can on smaller time frames. So let's kind of go through this here and kind of tie that in to maybe you want to have a little bit bigger of a risk to reward to increase that margin for error, and maybe you want to be looking at that daily time frame in order to make sure you can have some more confidence in these moves. So the swing trading strategy that I love to use, again, this is something that we talk about way more in depth in my educational curriculums there. Again, you guys can't actually hop into it right now. There is a waitlist down below if you guys do want to come in and learn how to find stocks that are about to explode before they do, and get access to the nastiest day trading strategy that I have ever built. It has like 15, 16 winning months in a row. The reason why I've waitlisted it, guys, is that I tell all of you that each and every single one of you guys that does come in, even though it's an incredibly low cost, has the ability to ask me questions and have them answered to you so that we can have that dialogue going back and forth. And that takes me a lot of time to do it. So if you guys would like to hop on the waitlist, the link is down in the description. But let's take a look at this RKT trade. So this is about a 1 to 14 risk to reward trade on the daily time frame. This is very significant. Now, when we look at this trade here, again, this is one of the main reasons finding stocks that are about to explode that I was able to go up over 35% on my swing account last month. If you were risking 1% on this trade and taking profits on the way up here, I mean, you would have probably still been able to get a 1 to 7 overall risk to reward. Risk 1, make 7. Sounds like a good deal to me. But how do we identify these? So part of this is going to be looking for stocks that look like they want to start stair-stepping. They make a big move up and they start to move flat. In this example on RKT, again, we had to do a little bit of work on this one in order to get this entry, and I'm going to show you guys a little bit of a better one in a second. But this RKT trade breaks out of this nice range of consolidation here, moves up. Oh, we have another area of stair-stepping converging into this EMA here, breaks to the upside, moves back up. Okay, you see it again. Flat line, move up. Not necessarily flat, slowly grinding its way up before it really makes its big move to the upside. Now, you may be asking me, why didn't I capture the rest of this move here? Well, again, I mean, I was just targeting levels back in here. As you can see, I mean, we had this level right in here. You can see all of these levels that I've highlighted for you guys as well. These were key areas of where I wanted to take profit. Now, let's talk about this one right here on a firm. This is a little bit of a better example. So we have a stock starting to move up, starting to move flat, starts to break out of the range, and does absolutely nothing but rocket to the upside. So again, we're going to go over this a lot more in videos to come, guys. This strategy, some other strategies. Again, if you guys are on the wait list there, you guys might be able to hop in soon, but I don't foresee myself opening any spots in the near future. But this is the overall, the way that I answer this to everybody, that I explain this very simply, is how do I trade? Stock move up, stock move flat. If it starts going up again, buy it. Now, again, let's go through very, very quickly where the risk is on some of these trades before we wrap it up here, and then continue through some of the different areas at which I might want to take profit on a trade like this. So when I see these ranges and it starts to break out of the range, I will enter at the break of the range and put my stop just below that daily candle's low. Now, looking at this chart here on a firm, all I'm going to be doing is targeting prior levels. So we would have this one right here, and we would have this one up in here. So these would be my two areas of take profit that I would be looking for on this affirm trade here. So we can see that the first level at which we would want to take profit is about a 1 to 3.62 risk to reward. That is perfectly fine, and we hit a lot of those. Then you move up to this one right here. This is a 1 to 11 risk to reward. And then you come back up to that final level right there. That was about that 1 to 15 area. So to kind of wrap this up in a little bow, guys, what you guys need to be doing as new traders in order to make sure that you're having success for the long term and putting yourselves in the best position to have success in the present is to kind of shy away from some of those shorter term strategies that a lot of people are trying to push on you. Even though they may work, you may not at this time have enough understanding of markets to be able to execute these strategies. But every single person can do things like this. Then we need to combine that with a higher risk to reward strategy on a larger time frame and identify when stocks are going to explode before they do. When you guys see on my Instagram stories all those testimonials that I have that I post of all those students making ridiculous amounts of money, this is exactly how. You are finding stocks that are about to make big moves before they do. Now, the interesting thing about these strategies here, guys, and when we're talking about that risk to reward, let's say that you're taking profits along the way and you get, even on a full 1 to 15 risk to reward, maybe you make a total return on your investment of 1 to 8. So let's say you risked 1 and you made 8%. Well, that means you can lose the next 7 trades in a row and still be break even. That's the margin for error that we were talking about earlier. If you hit a 1 to 1, well, if you lose the next trade, you're back to even. If you hit a 1 to 3, you can lose the next 2 trades. If you hit a 1 to 5, you can lose the next 4 trades and still be even. This gives you guys enough margin for error to get that stair-stepping movement, not on the chart here, but in your actual brokerage account when you guys see that stair-stepping movement on your portfolio value. So guys, that's going to wrap it up for this one. If you guys did enjoy the information I provided for you guys in this video, if you wouldn't mind, go down, hit that like button, comment any questions that you may have, and subscribe for more videos like this.